Good morning, everyone, and welcome to Turnaround Tuesday. And the turnaround is going in the direction that I don't want to see. So, boy, I tell you what a difference a night makes. The markets, it seemed to last couple of days been kind of the volatility we've been holding. Yesterday, things were looking pretty good, and we got right in towards the tail end of the day. The market sold off, volatility spiked up to, just under 19, and then overnight it popped, and now we're sitting looking at a volatility over 21. It's you know, this is the seasonality. And what a lot of times September, October brings, but there's just a lot of uncertainty in the market right now. And then when you couple that with some fear stepping in, you get some really moves. It's tough to catch a falling knife. Anyways, so um, with that being said, let's jump into today's pre-market prep. And I've got to start with some housekeeping rules. And basically, just so you know, I'm not a financial advisor, nor do I give financial advice. Anything I talk about in my videos should not be misconstrued as a suggestion to trade a particular stock or to buy or sell a particular option or any particular strategy. These videos are part of my trade journal. As part of my trade journey, I document them as a way for me to develop a trade plan for the day and how I plan on trading the day based on what I see going on in the pre-markets and what has happened since yesterday and what has happened going into today. And a lot of times I get it wrong, and sometimes I get it right. But the biggest thing is, you manage your risk and you trade your own money. You can lose every penny of your own money. And so with that being said, let's jump into this, and we'll make this one a pretty quick one here today. So let's go ahead and start with the VIX. Being the VIX looks like it's popped here overnight. And so let's take a look at the chart here. And we are above the 20 line here. And, with all intents and purposes, we had, things were looking like it was all moving in the right direction yesterday with volatility dropping, but volatility spiked again. But if you look back, to previous times, the volatility spikes when it has spiked way up there. It has had a tendency to kind of, chop around before it calms down. And so I think we are in that period of time where, we've got that big spike. Even though we would like to say, hey, the worst is over, we're going right back to the bull market, that we, buy the dip mentality. This is not necessarily what is taking place. So, but if we look through the past, we get, back in June, we had this spike up and another spike up, and then it flushed down, and we got right back down to 16. And then we popped up, come down, popped up, and then we've kind of did this little chop before we come down, up, and then, and then down, and then, right in here, and came back down to 16, back up, chop, back up, way up here. This was just last week. And now here we are coming right back up to the +1 ATR on the daily chart. So we'll see if we can hold this trend line right here. We got this one breakthrough here candle last week, but on the long-term trend, we'll see what happens. But everything here on the weekly chart is trending upward. So I don't think I think we got more of this volatility to come. So let's just kind of look at that from that standpoint. The bond rate is up. The 10-year bond is up over 1.5. So that's a big part of what's driving this and everything. So let's jump into the Dow. The Dow is coming back down to its 21. It was looking like it was one of the stronger stocks here since we've, established a bottom here. It looks like we're going to come back down and retest some key levels here. So, I would say this key level of about 34,500 is going to be a key level, and see if we can if we get down to that point. We're down 144, so that'll put us down about 250 points roughly. So we'll see if we can hold this key level here. Matter of fact, I think we're going to just put in a trend line there and kind of get an idea of see if we can kind of hold that level of about 30. Well, it shows 34 480, but we're going to make that a key level here, and we're going to put that as 3,500, and we'll see if we can hold. Whoops, wrong one. 3,400 is what it should be, not 35. I need more coffee, and that's actually not right either, but we're going to move that up manually. So activate the drawing. Yeah, we just need more coffee. That's kind of where I was trying to shoot for. It 34 450 is probably what is really what I was after. So let's just make it that. Now I know what the heck I'm doing here this morning. And so 34 450, we'll just make that a 50. That's kind of a key psychological level right there. So there's what we want. We'll see if we can hold that level. I think that'll be a key level. That's right at the weekly 21. So that's going to be, a level I would like to see this hold. So let's jump into the Russell. The Russell actually has been looking really, really strong. But again, we got up to these key levels here, and Russell's just been in this chop fest. And so it got right back up to, about 2,300, and now it's pushing back. But again, the small caps have been strong because it likes these rotation type things where people are looking for particular stocks and that might give us an edge. And so the small caps have been doing pretty good through this process, and they're not down a whole lot. They're only down 6.9%. So they could easily recover today and continue their leg upwards. And then we're going to look at the S&Ps, my favorite S&Ps. S&Ps are struggling here this morning, down 36 and a quarter, coming down. It broke down below the daily 50. So I would want to see, if the S&Ps continue going, I would want to see the S&Ps to probably hold this key level right here. We're going to put in a little trend line right here. I would like to see it hold this key level, and we'll just call it 4380. And that would be a level that I would think we would come down and maybe test first before we go lower. So we'll see if we can hold that level. Again, all bets off depending on what the VIX is going to do. If the VIX kind of calms down here and levels off and maybe comes back down to 20, the worst may be behind us. And then the last thing is the Qs. The Qs are really taking a pretty big hit, but you might look at here on the daily chart. Looks like we may have a double bottom beginning to form here. So again, this could we'll see how this holds up, but we broke down below that 15,000 mark, so that's a key level. So we'll see if we can hold there. We're not too far from the low here of 14,780 roughly on the low of the candle last week. So again, that would put us at around the 2,100 to 14,710 if we get down to this point here. So that would be a pretty big push. So going down another 200 points roughly. So all in all, pretty ugly day shaping up. I'm going to manage my couple trades I have. I've got a couple longs. I got an SPX trade expiring. We are in the tanker on that big time right now. So may look to, I don't know what we're going to do with that one, but I did put on a couple shorts with the, I put on shorts on Nike. That sounds funny. Did not put on Nike shorts, but yeah, put on Nike shorts. There we go. And then I turn around and also put a short on Dollar Tree. And main reason being is with all the infrastructure problems, a lot of their products come over from China, the containers, things like that. So looking at that as a play, kind of glad I put those on because those are down a bit here this morning too, and they're going to probably continue their trek down. So those are going to act as a pretty, at least a little bit of a hedge for some of the losses I'm taking on my other plays. So with that being said, it's turnaround Tuesday, but we're not getting the turnaround that we want, and we'll see if we can hold these key levels, and let's have a good trading day. You guys have a great day. We'll talk to you tomorrow.